So I was just digging into some financial reports, and stumbled upon SBI Life's latest quarterly results. And wow, it's a lot to unpack.
Oh, interesting SBI Life, huh? Well, they're a big player, so I guess we should dive in and see what's happening with their numbers, right?
Exactly. Let's start with something that caught my eye, their new business premium. That's basically the money they get from new policies, right?
Yeah, that's right. It's a key indicator of how well they're attracting new customers, and it looks like they've got a pretty good chunk of the market share, actually.
Okay, so I see here it says they have a 22.4% market share in the private sector for new business premium. That's pretty impressive, isn't it?
Definitely, it means they're leading the pack in bringing in new business within the private sector, which is a good sign of growth. Like, it's a big deal.
Right. And they're also leading with individual new business premium that's at 198.6 billion with like a 12% growth and a 27.8% market share. So people are signing up for their individual plans. That makes sense.
That shows they're not just getting big corporate deals, but also attracting individual customers, which really adds to their stability.
Okay, so that's the new business. But what about the money they're getting from folks who are already policyholders, the renewal premiums?
Well, that's just as crucial as it's the income they get from existing customers continuing their policies. And they've seen a 15% jump in that. So that's like really solid.
All right, so a 15% jump on renewal premium. Yeah, so it means people are sticking with their policies. That's a good sign of customer satisfaction, I guess.
Exactly. It's a sign that customers are happy with their services and are choosing to remain with them for the long haul. So it's a great measure of their success.
Now, they also mentioned something called APE, which is annualized premium equivalent. How does that fit into all this?
Well, APE gives you a standardized measure by combining both the annual premiums from regular policies and a portion of single premiums. So it helps to compare apples to apples. Like it's like converting different currencies to USD to see what the value is in the same form.
Okay, makes sense. And their APA stands at 159.7 billion with an 11% growth. Not bad at all, right?
Yeah, that's a solid growth, showing they're effectively growing the overall premium income they're generating from various types of policies. That's what I see.
So all this growth, it has to, I guess, lead to profits. I see, or they mention their profit after tax or PAT, which is what they make after expenses and taxes, right?
You got it. And their PAT has increased by a whopping 48% to 16 billion. It shows that their growth isn't just in revenue, but it's actually converting into real profits, which is like music to investors' ears, right?
Absolutely. That's the bottom line. And something else I'm noticing is their assets under management or AUM. That's the total value of all the investments they manage. That's at 4.4 trillion.
Yeah, and with a 19% growth, it shows how well they're growing their investment portfolio, which is, super important for their long-term financial stability.
Okay, so that's the growth aspect, but they also talk about something called Indian Embedded Value or IEV. What's that?
IEV is a kind of measure of the consolidated value of their life insurance business. It considers all the policies they've written since the start of the company. It's a way to estimate the total value they've created.
Okay, that's like looking at the overall worth of the company's insurance business, not just their current profits. I see their IEV stands at 681.4 billion with 17% growth over last year.
That's like showing how much the company is worth based on the profits they're expected to make from the policies they've already sold. It's a great indicator of their long-term growth potential.
Right. And there's something called VoNB or value of new business. What does that measure?
Well, VoNB is the present value of future profits from new policies. It's about how much money the new business they're writing will make them down the line, which kind of gives a good view of future profitability.
All right. And that's at 42.9 billion. So it shows that their new sales are going to contribute to their future profits. So what's a good way to measure how well they're doing with that?
Well, that's where the VoNB margin comes in. It tells you how profitable each unit of new business is. Like, are they making a good profit of each policy they're selling?
Got it. And their VoNB margin stands at 26.9%. That's, I guess, a good indicator of how efficiently they're managing their new business, isn't it?
Absolutely. It shows that they're not just selling policies, but like they're also making good profits from each sale, which is what everyone wants to see, really.
Okay, one more term here that I want to understand, persistency. What does that mean?
Persistency is about how well they're retaining customers. It's the ratio of policies that remain active over a period. Like if you signed up for a plan, are you sticking with it or did you leave?
Okay, so they mentioned 13th month and 61st month persistency rates. I see an improvement there by 83 basis points and 521 basis points, respectively.
Yeah, an improvement in persistency is really, really good. It means they're doing better at keeping their customers for the long term, which is crucial for their stable growth.
All right, so to summarize, SBI Life is doing pretty well. Their new business is growing, renewals are up, profits are soaring, and they're retaining customers.
Well, yeah, exactly. They're a leader in the private market, and all their key indicators show healthy growth and financial stability. I'd say that it's a very good place to be.
That's a lot to digest. It seems like they've got a handle on their business. But I do want to check in to see if there is anything else we should be aware of.
Well, there are some other key things worth noting. For instance, they talk about their solvency ratio, which measures their ability to meet their long-term debt obligations.
Oh, yeah, the solvency ratio. It's at 2.04, which is like good because it's way above the regulatory requirement of 1.50. Right?
Exactly. A high solvency ratio like that really signals their ability to handle their financial obligations, and it's a sign of their financial strength. So you know they are on track.
Okay, so that's like a safety net that shows they can handle financial shocks. I see here that their operating expense ratio is at 5.3% and their total cost ratio is at 10.2%. Can you explain that?
Right. Well, the operating expense ratio tells you how efficiently they're running their business, while the total cost ratio includes commissions and all operational costs. Like they are the costs associated with doing business.
Right. So lower ratios means they're doing a good job of keeping their expenses in check. It seems like a lot of moving parts, that have to come together to make it work.
Yes, and like all of these components contribute to their overall profitability and are critical for long-term growth and financial health, like a well-oiled machine.
Makes sense. They also mention here that 94% of their debt investments are in AAA and sovereign instruments. What's the significance of that?
Well, it shows that their investment strategy is very conservative. It means they're investing in super safe securities, which minimizes the risk of losses from debt investments.
That's great. It's good to know they're not taking unnecessary risks with their investments. Okay, now switching gears a little bit, there is also a part in here that mentioned a legal issue with Sahara India Life Insurance Company.
Yeah, that's a situation where ERDI ordered SB Life to take over Sahara's insurance business. But there was a legal stay on that order. It's like a tug of war, but the case is still pending.
So the impact of that transaction is still uncertain. They're waiting on further directions, I guess?
Precisely, like they're waiting for the final ruling before figuring out how this transaction, if it happens, will impact their financials, which is just responsible of them.
Okay, so there's that little uncertainty hanging there. But overall, it seems like SBI Life is on a pretty solid growth trajectory.
Yeah, I'd say they've shown a robust performance and they've got a lot of good things going for them with great market share and customer retention.
Before we wrap up, can we go through the key takeaways from this just to recap everything we just talked about?
Sure. So they're leading the private market in new business premiums. Their renewal income is up. Profits have jumped massively. They have a huge amount of assets under management and they have a strong solvency position.
Right, and their Indian Bennett value shows good long-term potential. They're efficient in generating profits from new business, and their customers are sticking with them.
Precisely. They are also, doing pretty well in keeping their costs under control and also are very conservative in their investment strategy.
So all things considered, a pretty strong showing, despite that pending legal issue. And actually, if you all are interested in keeping up with our podcasts, please like, share, and subscribe to our channel.
Definitely, it's been an insightful look into their financials. So, what do you think the key drivers for their future success are going to be?
That's a good question. I guess it depends on how well they can maintain their operational efficiency and customer retention. given everything that's going on in the industry.
Yeah, that's true. And keeping an eye on how their legal battle goes will be essential. It really is going to be a big factor moving forward.
For sure. So it'll be interesting to see how they perform in the coming quarters, with all that in mind.
Absolutely. It'll be worth keeping an eye on how their numbers keep trending and what changes they end up making.